Across Washington, from Seattle to Vancouver and east to Spokane, housing inventory just jumped between 17% and 27% in 1 year. But prices, they barely moved. That tells you something big is happening. And if you're buying or selling, you need to see the numbers. I pulled real data from Reventure for the Seattle MSA, Clark County, and Spokane County. By the end of this video, you'll know exactly what's happening and where the opportunities are. I'm Matt Jolivet, president of Associated Mortgage Brokers. I've been a licensed mortgage broker in Oregon, Washington, and Idaho for 26 years. I've seen every kind of market, and this one, it's frustrating as hell. If you're a buyer, you've been sitting on the sidelines waiting for prices to drop, but they won't budge. You're wondering, did I miss my chance? Or should I keep waiting? If you're a seller, you're confused. Your neighbor sold for top dollar 2 years ago. Now your agent says you need to price lower and homes are sitting. You're thinking, did I wait too long? And if you're trying to figure out if this is a crash, a correction, or just a pause, you're not alone. Everyone's asking the same question. Here's the truth. The market didn't crash. It's just stopped being insane. And that actually creates opportunity if you know where to look. Here's what we're covering today. 1, what's happening with the Seattle prices. 2, whether Clark County is affordable again. And 3, why Spokane might be the safest bet in the state. Let's start with Seattle, the biggest housing market in Washington. The median list price is $769,000, down about 0.5% from last year. The average home value is $739,000, basically flat. But here is the real story. Inventory is up 27% year over year. There are now over 10,000 homes for sale, the most we've seen since before the pandemic. If you're buying, you finally have power again. More homes to choose from, more room to negotiate, and fewer bidding wars. If you're selling, look, pricing matters now. Overpriced homes, they sit. Homes priced right, especially in Bellevue, Kirkland, or West Seattle, still move quickly, but the luxury market is softening. The real problem, affordability. The average mortgage payment now takes up 43% of household income, up from just 25% in 2015. That's what's slowing demand. Not a lack of buyers, just a lack of affordability. Seattle is still the economic hub of the Pacific Northwest. Tech layoffs have slowed, Amazon and Microsoft, they're hiring again, and Boeing's expanding production. Healthcare and biotech are quietly growing too, and that stability keeps real housing demand alive. I don't think Seattle's cooling, it's just maturing. That's what a long-term healthy market looks like. Bottom line, this isn't a crash. It's the market catching its breath after 10 years of wild growth. Buyers have leverage, sellers still have massive equity, but need realistic pricing. Investors should expect long-term gains, not quick cash flow. Hey, real quick, if you want me to pull these numbers for your neighborhood or run what you would qualify for, the link's below. It takes 2 minutes to schedule. Now let's head south to Clark County and the Vancouver area, where I grew up. For years, Clark County has been the affordable option for people leaving Portland. No state income tax, good schools, and lower home prices. Right now, the median listing price is $649,000, down 1% from last year. Inventory is up 17%, sitting around 1,770 homes for sale. Homes spend about 47 days on the market, and 1 in 5 sellers drop their price before closing. That's not panic. That's balance returning. And honestly, it's been a long time coming. Affordability is improving too. The average mortgage payment now takes up 40% of income, down from 46% last year. Still high, but headed in the right direction. The local economy is solid and population growth is steady. Most families are relocating from Oregon and California. Clark County's advantage is simple. You get suburban living, great schools, no Oregon income tax, and easy access to both Portland and the Gorge. This market isn't falling, it's finding balance. All right, now let's go east. Let's look at Spokane County. Quieter, more stable. The median listing price is $505,000, also down 1% from last year. The average home value is $339,000, virtually flat. Inventory is up 19%. Homes take about 55 days to sell, and roughly a quarter of listings see price cuts. Spokane didn't get as crazy as Seattle did, and that's why it's holding up better now. Actually, this market feels normal, and that's actually rare right now. Affordability is Spokane's biggest strength. The average mortgage payment is 35% of income compared to 40 and 43% in Western Washington. That's a meaningful difference. The economy here is diverse. Healthcare, education, and Fairchild Air Force Base keep things stable. Manufacturing and services are growing, and more remote workers are moving east for space and affordability. For investors, Spokane is one of the few Washington markets where you can still find positive cash flow, especially under $400,000. Rent growth has flattened, but vacancy remains low. Spokane is the steady middle ground, affordable, stable, and positioned well for the next growth cycle. All right, let's wrap this up. Here's the quick version. Seattle, $739,000 average home value, flat from last year. Inventory up 27%, markets normalizing. Clark County, $544,000 average home value, down 1%. Inventory up 17%, stabilizing. Spokane, $339,000 average home value, down 0.5%. Inventory up 19%, balanced and resilient. Across all three markets, here's what matters. If you're buying, you have leverage again. You can negotiate. If you're selling, realistic pricing is everything. Bidding wars are over. If you're investing, focus where affordability and growth overlap. That's Spokane and Clark County. Want me to break down your zip code or show you what these numbers mean for your loan options? Drop a comment below and tell me where you're looking. If you're planning to buy, sell, or refinance this year, click the link in the description or go to nwmortgagebroker.com to schedule a call. Zoom, phone, or in person. I'll break down your numbers with you. No pressure, no fluff, just real answers. Where are you watching from? Drop your city in the comments. I'll pull your local data. Look, this is the most balanced housing market we've seen in years. It's still expensive, but stable. If you play it right, this might be the best time in a decade to make your move. I'm Matt Jolivet. Thanks for watching, and I'll see you on the next update.